The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
There are a couple of more value stocks that our value strategist Tracey has uncovered for your review. She's here now to talk more about them. One of them is a gold miner.
I know. I have to say, I think this is a first in Zacks history.
For you?
A gold miner as a value stock?
Yeah.
No, that never happens. I was even shocked. I'm like, of course I have to talk about this. The gold miners, everybody's interested in them right now, but for the most part, they're trading at higher valuations. But the one, Harmony Gold, it's one of the intermediate producers. They're in South Africa and also Papua New Guinea. So you do have to watch where the gold miners are mining the gold. So, you want to be in stable countries. You don't want to be mining in somewhere where there could be civil unrest or union issues and labor issues and all of that kind of stuff.
Sure.
But, we got South Africa here, so that's pretty stable, and they're getting it out of the ground. So the rank is increasing because the estimates are rising. And you can see here, they are supposed to make only 14 cents this fiscal year, but they're about to finish up this fiscal year. And then next year, it jumps all the way up to 75 cents a share. And that's where you're getting the really low PE because the shares, while they've taken off, are still giving you an attractive valuation. So the PE is only 5, a little bit over 5 times. So that's really cheap as long as, again, they're able to get it out of the ground, and they're making even more money because obviously the price of gold is back on the rise.
Right, but there's something to note here, and it's, I don't know if it's unique to the price of gold stocks versus the physical metal. Yes, the physical metal is going up.
Yes.
But the stocks don't always march in lockstep when that happens.
They don't. Sometimes they lag. And then in this case, the miners have actually been doing better than the physical gold. And you can see from this chart, the shares are up over 400% this year. I had to double check that. What? That seems nuts. It's
different.
A value stock. The shares are up 400% in 6 months.
Yeah.
But they were trading at the end of last year around 50 cents, and now, they're at $4.50. That's where you see this big gain. But really, I keep looking at these and saying, is this just speculation? Should anyone be in these? But there are real fundamentals, like I said, behind it. You have rising gold prices.
Right.
They're actually mining it. They're getting it out of the ground, and then they're selling it for this higher price. So right now, and for at least the next 6 months, the fundamentals look good.
Okay, no dividend, unfortunately.
Right, no dividend with this one.
But a good picture nonetheless.
Yes.
Then you have CSCO, which is a large networking company.
Yeah, Cisco, been around forever. It's considered old tech now.
Right.
But the old tech is kind of becoming back in. Suddenly people are looking at these old kind of stodgy names. But those stodgy names earn, relatively secure and consistent earnings.
Right.
So people looking for that right now are turning to some of these guys. Cisco shares are still cheap, trading under 14 times. That's pretty attractive here, especially given what's going on with some of the other big tech names. And then you have the rising earnings estimates, which is why you have the Zacks rank 2 here. It's slow, but if you like the steady, as a lot of investors like right now,
sure,
this is what you're going to get. You're only getting about 7% earnings growth this year and about 4 to 5% so far for next year. But you're not really buying it for the earnings growth. You're buying it for the stability. And shares, interestingly, haven't really done much for a couple of years. They traded in this narrow trading range, but they're now hitting new highs. And it looks like, if you look at this chart, that they're about to break out here. And I think that is because investors are rotating into some of these old tech names. And, the sentiment is just really picking up. So why not be in a well-managed, well-run company that's paying a very nice dividend, 3.5% yield here. So if you're looking for those dividend plays, something kind of stable, the rising earnings, this isn't a bad name to consider for your portfolio.
Yeah, 3.5%. Besides, nothing to sneeze at.
No, not at all.
All right, do you own either one?
I do not.
All right, check out more stock information, stock picks and stock picking strategies and commentary and lots of other stuff on our website, Zacks.com. If you're not there already watching this video, get on over to the homepage because there is where you can link to it all from. With Tracey, I'm Terry Ruffalo.